Carley, welcome back to Face. Great to have you here.
Thank you,
To me,
Dale.
it's a major news event to be able to talk to you and see your technical work because um, it's excellent.
Well, thank you. I
So,
appreciate that. Let
yeah,
me share my screen here. Is that okay?
sure.
Okay.
So,
All right.
quite a period of time we're living in here,
Oh man, you're telling me
huh? Uh,
these are some wild, wild times.
yeah,
Yeah,
um, wildest I've ever seen in my
same,
lifetime.
same.
So, what are we looking at? The
Okay.
Widowmaker?
Yeah, this is natural gas. I just happen to have this up, so we can talk
All
about any
right.
market you want. But um, this is a daily chart of natural gas, and the
Yeah.
reason I bring it up is um, everyone's kind of given up on gas. We're trading under $2. It just every all the rallies are being sold into, which is pretty normal for natural gas. Natural gas speculators, like the large speculators, the guys with big money and big accounts, are aggressive sellers. They're almost always net short. In fact, they are always net short. Even even into the
Wow.
giant rallies, they just keep selling into it because natural gas goes down more than it goes up, and
Okay.
it just is what it is. But with all
Well,
of that
it
said,
was easy to sell VIX calls, except when it went to 60.
that's exactly right. It's
Right.
well, a couple years ago, anyone short natural gas paid the price. So it
Yeah.
does every once in a while wake them up. But I think the natural gas market's probably short-term bottoming. This is the daily chart, so you can see what I'm looking at. We're sitting right
Yeah.
on a pivot line. Seasonality turns right around now. Um, the dollar is selling off, which is in theory a little bit helpful, not dramatically, but a little bit. Chart looks good. What we're, I mean, if you're interested, how we're playing it, this is not
Yeah.
advice. This is just to give you an idea of some of the ways to do this. We're going all the way out into April,
A
and the
risk
reason we're
reversal.
risk reversal, we're selling a
Okay.
put. You can see the April chart's a little bit different, but April
Yeah.
seasonality is the same. If the front months go up, April's going to follow. The
April
reason we're
looks
going
better than spot.
It does. It does. And
Yeah.
the reason we go to April is that's past the shoulder season. So it's past basically the winter season. So even if there's really mild weather, this trade should be okay. It may not make money, but it probably won't lose money. April's going to be um, pretty resilient, or it should be on most years. So anyway, we're selling a deep out of the money put. Markets 280, so we're selling 60 cents out. And again, not advice. I'm just letting you know this is kind of an idea if you want to put a
Yeah.
foot in the door without a whole lot of risk. Technically, you have unlimited risk on this option underneath
Yes.
220,
Yeah.
but margin's only 750. That's kind of tells you the exchange doesn't think it's too big of a problem. Now it can be if we're just dead wrong. That can become a problem, and you have unlimited risk down there. But basically, we're not really doing it because we think um, you know
You really don't
well,
have unlimited risk when you sell a put because the worst it could go to is zero. You have
well,
unlimited
that's
risk
true.
when you sell a call because it could go
Correct.
to
Now,
infinity.
you're absolutely right. Now, regulators tell us we can't say that though because crude went negative, and they say, "See,
Oh,
crude
that's
crude
right.
went
See, oh
negative."
yeah.
So, so I just look. I'm not trying to make the regulators mad. So for
All
me, it's
right.
unlimited risk.
I forgot
But
about those guys.
yeah,
Yeah.
and so
They, yeah,
yeah,
yeah.
it is what it is.
I know.
So we're selling this put for about 1200 $1,200. We can buy this call for about the same amount. So it's a free trade. We don't think Nat Gas is going to $4, but the thing is, volatility in this market is very, very low. And if volatility picks up, which it most likely will, and it almost always does this time of year going into the winter, this call has the potential to pick up a heck of a lot more value than this put will even lose. So
Interesting.
it basically it's just a highly leveraged trade with relatively low risk, unless we're just dead wrong and natural gas is going to $1, which I don't think is going to happen, but it could. So
Nice.
yeah.
Very nice.
All right. Any other market you want to talk about?
Well, where you at on gold?
Okay, that's a good one. All right. Hopefully we can there's a lot going on this chart. This is a monthly chart.
Yeah.
And we've been talking about 2600, 2650 for a long time in gold. It's finally getting pretty close. Now, I'm not going to say I'm bearish gold yet, but I think like the window of opportunity is kind of basically, let's put it this way. We've been playing the upside for
90% of the
quite a while.
move you're looking
Right.
for is done, right?
Correct. So yeah,
Okay.
so we've really kind of pulled back in gold. We're not telling our clients really not to be too aggressive up here because they're trying to, in our view, and we could be wrong, maybe gold's going to 3,000. I don't, who knows? But
Yeah.
in our view, to make it another $100 in gold, you're risking probably several hundred. And so the risk reward for us just isn't there to try to be aggressive in gold. But we probably do go a little higher. We probably do test this trend line, and knowing gold, maybe we punch up a little above
Yeah.
it. But
Good. Yeah.
yeah, if you're a bull, you probably want to, lock in some gains. Don't be greedy. Gold is a really awful market. Like hopes and dreams go to die in gold. They just do. I mean, remember these people thought 1800 gold was just the beginning of the rally, and we were going to go up to 3,000. Well, they waited a decade to get their money back if they sat tight. So,
Yeah. Okay.
okay.
Point taken. What
Mhm.
what else do you have conviction about? Are you kind of in the position here, Carley, and it's understandable
Mhm.
where you don't want to do a lot in this environment? For example, I've been bearish a dollar for a while. I put
Mhm.
out my
Yep.
stuff, and
Yep.
we had a nice breakdown. Does it look like we're bouncing today? We could get a decent
Mhm.
bounce here in the dollar.
We could. I mean, this is our monthly dollar chart that we've kind of been
Yeah,
watching. We're on support. It's held this. This is the third or fourth time down here. It's been
yeah,
bouncing each and every time. So maybe that was it, but I don't think so. I
yeah,
think we're turning the corner. Like the markets are really trying to normalize. Um, I mean, they're trying. That's all I can
yeah.
say.
Well,
So,
that
and
wouldn't that be a major breakdown under par?
it would.
That's a
I
big
think
formation.
correct. Yeah. So I think if we can get below 100, I think 92 is pretty easily, probably even the high 80s. And in my eyes, that's a sign of normalization, like getting back to business as usual instead of all the chaos that we saw post-COVID.
Okay. I bought some Tecurium wheat
Oh,
ETFs yesterday. I was wondering, I mean, the grains are
mhm.
one of the few commodity markets that have not participated in the recent run.
Right.
That looks kind of ugly down there.
Right. So but I'm with you. I think the grains are in the process of bottoming. If we haven't seen the lows are probably pretty near. Actually, I wrote a newsletter to for our clients. I can post it on socials after this just so people can see it.
Okay, that'd be
Uh,
great.
ba- it's pretty simple. The basic idea is um, seasonality in grains. Like normally, we're talking about harvest lows. Harvest for soybeans and corn, anyways, in October. Um, Usually in the big picture over the last 30 years, that's generally when you see a market low. But if you look at data over the last 5 years, the grains have been bottoming in late August, early September. So I think seasonality is starting to turn favorable. Um, we just looked at the dollar. The dollar is collapsing. Eventually, that's going to help grains out. So I'm talking about not only just wheat, but corn and soybeans also. I'll show you those charts in a minute. Um, this is a monthly wheat, by the way.
Did you know that the move that the Ukrainians made
Mhm.
um, in, into Russia,
Mhm.
that Kursk region is their breadbasket?
Right. Yeah, that's okay. So
Go
see
ahead.
this really big spike here. That's when
Yeah,
Russia invaded Ukraine.
right, right.
And there's a lot to that story. So it's the world's breadbasket. So the fundamental story was just overwhelmingly bullish. But the problem was, I don't think, in my opinion, we really had no business ever getting to 13, $14 wheat, maybe 10, maybe 11.
Yeah,
But what happened was that well, I'm not trying to talk bad about anyone's products or anything, but wheat ETFs basically started coming up on the heat maps of everybody that has like Webull or whatever stock trading app they're using. So all of this money started flowing into the wheat ETF. Well, the wheat ETF and other commodity ETFs, most of them pool investor money and then go and buy futures contracts. Well, guess what? The futures market, like especially wheat, it just cannot absorb that amount of mass influx
okay.
of cash all at the same time. And so what you saw here, and it was honestly a personal nightmare for me. Um, there were probably 6 or 7 limit up days because according to the ETF's parameters, they had to buy, they had to put this money to work. They had to buy so many contracts, but there weren't enough people on the other side to take those. And every day the market was just going locked limits. So only a handful of contracts were actually getting to trade. And that's what took us basically from 9 all the way up to 14. It was
Wow.
probably a week and a half. I'll tell
That's
you
how
just,
commodities,
yeah,
limit moves.
yeah, it's brutal.
They used to happen a lot more often in the 70s, but they're very
Yeah.
rare nowadays.
Well, they are.
I want to ask you, you're an options trader.
Yeah.
Um, did you have people long the VIX calls and they didn't get paid even though VIX went to 60?
Well, so we are a futures and options brokerage. It's kind of tricky with the VIX. VIX options are actually a stock product. So we actually don't have access to it on our systems. I mean, I could personally if I went and if I had a stock account somewhere
Yeah,
else, I
okay.
could, but
Okay.
our brokerage doesn't. But we did have we did have a lot of clients positioned on the downside in the S&P. I'm not saying we're perfect. We were early and it took a while for it to work out, but it did work out. But I will tell you the S&P options, the E-mini S&P options, I'm talking about options on futures, they were pretty orderly, to be honest, considering the chaos. I'll tell you one story. I had one guy that emailed me on the Thursday before all heck broke loose, and he asked about September 4800 put, and I gave him a quote. I said it's about 500. At that point, it was way out of the money. It seemed kind of like a
Yeah,
pipe dream.
right.
And he emailed me back on Monday, and this is like Monday after the S&P had just melted down for 2.5 days, and was like, "Yeah, I'd like to buy that put now." I'm like, "Well, it was 500 on Thursday. Today it's 9,500, and it was the bid ask actually wasn't that blown up. That was a legitimate uh, valid price. So
Because the VIX
things got
options
crazy.
didn't trade.
Well, I've seen
Did you
that
hear about
happen.
that?
Yeah, I did not hear that. No, was it just nobody to take the other side or?
Yeah.
Yeah, I believe it. As a
So they got
broker,
bailed.
yeah,
All the shorts got bailed because they wouldn't
yeah,
make
good.
a market.
They got lucky. Well, and
I don't know.
yeah, and it
It's
happened so fast.
crooked.
They got lucky. Yeah, they got lucky for sure.
I don't
Anyone
know.
that's on the wrong side,
It's dysfunctional. Yeah.
it is
You
dysfunctional. Yeah.
you could be right and not make money, right big and not make
Well,
money.
I can fully appreciate that point of view, but as a broker, I understand the other side of it as well. Like as a futures broker, we're not dealing out of our book. Like when someone buys or sells a futures contract or an option, it's executed directly on the CME exchange. We're
Hmm.
just giving them the technology and the means to gain access to that market, but we're not taking the other side. So it's
Yeah.
other markets, it's not like that. And the VIX is a stock product, so it's not like that. It's a little different. But on our end of things, there is, you can't force like market makers when markets are quiet. They're just it's easy for them to accept the risk and do what they need to do. But when markets get really volatile, I mean, these people, a lot of them are trading with their own money or with their firm's
Yeah.
money.
Yeah.
And if someone you can't force someone to take the other side of the trade. If it doesn't make sense, it doesn't make sense. So I can appreciate why they wouldn't want to touch it, but um, we're
Yeah.
guaranteed access to the markets. We're not guaranteed prices or bills. And when you trade illiquid markets, less liquid than the standard markets, those things happen. I haven't had an experience in cocoa a few months ago when cocoa was wildly shooting higher. We didn't know when it was going to top out or what was going to happen, but we advised our clients to buy put options with like 6 months to expiration, knowing that at some point, eventually, gravity is going to take hold. And we bought the options for 5 or 6, 700, something like that. And at one point, they were worth a couple of $1,000s, maybe even 3,000 intraday, but nobody would take the other side of the trade. So we had the exact same experience. Like the exchange would settle them at a certain price every night, but it
Yeah.
was like a facade. Like nobody could actually trade them at that price. So I feel their pain. It's no fun for
Yeah.
sure.
Yeah. I
Yeah.
mean, didn't happen in the old days.
Yeah, I think, electronic markets have advantages and disadvantages. In the old days, you could always find a market maker to do it, but the price was probably, you
Oh,
probably
yeah,
didn't
the
want to hear about the
spreads.
price.
Yeah.
Yeah. So I don't know. It's good or
Um,
bad.
you have a view on oil?
I do.
I
So,
know you had a
yep.
view on natural gas. Oil
Yeah.
look better?
let me pull up oil. Before I do that, though, I'm just going to show you the other grains real quick. I'm not going to
Oh
really
yeah,
talk
go
about them.
ahead.
I know we've got a time pressure. This is wheat. You mentioned wheat. You can see we're
Yeah.
a 10-year trend line right here.
Uh-huh.
Um, corn and beans are the same thing. This is a 20-year trend line in soybeans.
Wow.
Yeah, so I mean, it's pretty compelling. Now, of course, we can break down
Yeah.
but sentiment is so low. Seasonalities are so supportive. I think we're really close to a turning point in beans, corn, and wheat. Same thing with corn. Here's the 20-year trend line, which is a little bit lower than we are, maybe 20, 30 cents. But in the big picture, this is probably time to start playing the upside.
Okay.
All right, let's look at
All
crude
right.
oil. Crude oil has done nothing for a year.
Yeah.
I've been accused of being a perma bull or an Uber bull. I'm not. All I'm the only thing I'm going off of is it hasn't broken this trend line that dates back 10 years. It broke in COVID, but that doesn't count in my opinion. That was just crazy. As long as it holds this trend line, which right now it's actually this says 68, but it's actually a little higher now. It's like the low 70s. As long as it holds that, it doesn't make any sense to be overly bearish. Once it breaks that, then all bets are off, and there could be some pretty good downside potential. But as long as that holds, I'd say eventually the next move is going to be higher. And seasonality, we still have another month and a half of seasonality that's favorable to the bulls. Again, we're talking about the dollar. The dollar collapsed. It's interesting. Crude oil and the dollar have been positively correlated recently, like last year or so, maybe even a little more than that, which is opposite of the historic norm. Historically, they're negatively correlated. As the dollar goes up, crude goes down, and vice versa. That's normal, but we're in an abnormal time period in the markets. So they've been moving together, which is super, super odd. But I think the theme is going towards normalization, and we'll get back to a place where the lower dollar will help out crude. And um, I think that's generally the mindset going
Okay.
forward, at least for us.
Okay. If we get through that 82 level, I come up with your 113 when you have
Okay.
115 as a one third
Okay.
2011 high. So
Yeah.
this was edifying to me, and it can
Yeah.
always overshoot and try to
Sure.
take out that high. I
It
noticed
could.
the RSI did confirm in 22.
Hmm.
Anyway,
The
all it would take is, you know,
Yeah.
Strait of
Well,
Hormuz. And is the
right.
market very short? And I know you say sentiment is
Hmm.
bearish, but is it
Yeah.
being expressed in the COT as well?
So that's a good question. I actually was just going to mention that. So crude oil is the kind of market that speculators are perpetually long. So it's the opposite of natural
Okay.
gas. Oil
All right.
specs are always long, but right now they're less long than they generally normally are. So they're only
Okay.
holding about 300,000 net long contracts when the all-time high is like 750,000
Okay.
contracts. So you can see where they're really, really
Yeah.
light, which tells me and I see this in the sentiment polls, and I see this when I'm chatting with people and on social media. Everybody's given up on oil. They've basically said, forget it, I'm going to go trade something else. And that's exactly when markets tend to make a move. We saw this
Right.
in gold,
Yeah.
a year ago. It went sideways forever. Everyone decided, you know what, I'm going to do
They
something
get
else. And then
bored.
yeah,
Yeah.
that's when it breaks out. So I think we're pretty close to that situation in oil where everyone's given up. And the last thing I'll say is volatility in oil, implied volatility in the options is near an all-time low. It's not at the all-time low, but it's very, very, very low, meaning the market's just been super quiet. Speculators have given up on buying options. Usually when you see that big of a lull in the implied volatility, it's like a precursor to something crazy happening. So
Like the
we've only seen
VIX.
exactly. It's kind of
Yeah.
like it's exactly like the VIX.
Okay.
We've seen the oil market this quiet a few other times. One was right here, right before the fracking crash. Another was right here before the 2020 COVID meltdown. And you could argue volatility was similarly as low right here. I mean, it was a little higher, but when you get these lulls in price like this, it's usually an accident waiting to happen. So
Okay.
we think that's probably the case.
Okay. So, Carly, your work is excellent, and a lot of people don't have experience with option strategies and executions. Why don't you let people know how they could
Mhm.
reach you, and
Okay.
um, you can only take clients from the U.S. That's
No,
correct?
no,
No?
actually, we take clients from everywhere. We have clients all
Okay.
over the world.
All right,
The
cool.
only place we can't accept, well, there's a couple like terrorist
Russia?
nations we can't. Actually, we've accepted some Russian clients. I don't know, it's been a year or two, so I'm not sure how that would work now, but
Yeah,
we've been able to. Like terror list countries we can't, and
yeah.
Canada, which shocks people. We can't accept clients from Canada because Canadians have really strict anti-competition rules.
Oh,
So it's really
okay.
weird, but anyway,
You
DeCarly,
know what you ought to tell them?
what's
That
that?
you have no competition.
Right. Right.
Go
Maybe
ahead.
I'll do that. Maybe I'll do that. You can reach us at decarleytrading.com. It's DECARLEY trading.com. On our website, you can sign up for a free trial of newsletters. You can read all kinds of information on just the basics of options and futures trading. So there's a lot of educational material there. And if you decide you like what you see, hopefully, and you want to trade futures and options, hopefully you choose us. You can also find us on social media at Carley Garner on X.
Okay. Carly's a pro.
Thank you.
Okay, so check her out. And, maybe, you don't trade grains.
Yeah.
Maybe she has a strategy that you would like. So, Carly, thank you so much.
Thank you.
Once again, some great looks. I learned a few things today, like I
Good.
usually do, and appreciate your giving spirit to come in here and share your hard work. Thank you.
Absolutely. Thank you for having me.
All right, Carly Garner, everyone. And you could find her on X at her name
Mhm.
and go to her website, decarleytrading.com. And that's a wrap. Everyone, thank you. People are thanking you, Carly. And we'll see everyone tomorrow. Enjoy Whip Around Wednesday. And I'll see everyone for uh, what rhymes with Thursday? Thoughtful Thursday. We'll have a thoughtful Thursday tomorrow. Okay. So don't just count your pips, count your blessings. Adios, everyone. Good hunting.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.